Hello and welcome to the Ferrari Financial Weekly Market News Summary. This week saw the small pullback we were expecting, not as much as we really felt should happen after the long run-up we've experienced, but Thursday saw a pretty good sell-off, with low volume recovery on Friday ending the week in good shape for the long Memorial Day weekend. Mixed news on the housing front didn't help the market much last week as existing home sales dropped to their lowest level for years, but a spike in new home sales helped to keep the market a little bit more hopeful that maybe the end of the downturn in property in the US is on the horizon. It was really the mergers and acquisitions activity this week that kept the market buoyant. Notable was Coca-Cola agreeing to acquire the mineral water company Glacéau, plus many other deals on the table. But let's have a look now at our chart for this week. The chart I want to show you now is the longer-term 5-year chart for the Nasdaq Composite Index. The reason I want to do this is because not only do I want to show the obvious long-term trend line which we've shown before, going along like this, I also want to show you the top line forming a very tight channel for the price movement over this last 4 to 5 years. And if I draw this top line in to where we are at the moment, you can see we've got the price movement staying within this channel quite deliberately, and showing that we are in fact at one of those extremities at the moment, touching that top line, and we don't feel there is really any sparkling news out there which would convince the market to break through this top channel anytime yet and increase the angle of the upgoing trend. Therefore, we feel the likelihood is still a return to the lower line again, which could be as low as 2,200 for the Nasdaq, and that is just returning to this long-term uptrend that we've seen over the last few years. And this could happen certainly within the next 2 to 3 slower summer months. The other scenario, of course, which we have to bear in mind constantly, is that we could be experiencing a fairly long-term head and shoulders pattern forming here. This being the left-hand shoulder. We've now risen up to what is probably the peak of the head of this pattern, and again decline down to around about the 2,200 for the Nasdaq could be on the cards for this pattern to be going forward to the right shoulder, which would be at about this level, and then the ongoing scenario from there, if it is a true head and shoulders pattern, is of course that in the fall we could then break through this sort of level, this level here, and experience a longer term downtrend towards the latter part of the year. We obviously don't want to see this happen, but we do feel it's a real possibility. We really can't help but feel that the long-term trend line is beckoning. There's too much in the statistics and the data of late that suggests that the US economy is not in the best of shape. We still feel that there's a lot out there of concern. For example, crude oil raised its price again this week to close at over $65 a barrel. These relatively high oil prices are still a major concern for industry going forward. Also, the general malaise of the US dollar. The currency is really not showing any signs of strength in the immediate future, and the long-term prospect really against the major other world currencies, particularly the euro, is not a good scenario. So we still favour an overall short position for the Nasdaq market. We feel that that long-term trend line will be tested during these summer months, and that would be our advice. Stay short. Until next week then, it's goodbye from London.